A quick story to start with. A scared Bitcoin holder calls another Bitcoin investor and asked if he's not concerned at all about the volatility of Bitcoin these days. The other Bitcoin investor replies that of course he's concerned, that in fact he has been sleeping like a baby. The scared Bitcoin holder was surprised and exclaimed, "Really? Even with all the crashing?" "Yep, I sleep for several minutes, and then I wake up and cry for the rest of the day." When Bitcoin gets feverish and lets out a sneeze, the rest of the crypto market gets the flu. On to the business of the day, the 5 reasons behind the recent crypto crash. What a month for crypto investors. The month has indeed not been fair on them. In the cryptoverse, there was a lot of awful hard work trying to debunk the words of Elon Musk's crypto criticism, with so many of the investors calling him out and accusing him of calling him a market manipulator. This didn't stop the crypto market from turning super red in a very hot flash crash. Many insiders, investors, and bullish investors gave so many reasons why Bitcoin nearly tested $30,000. Investors in the crypto world woke up to the grim news. A brutal sell-off that sent prices crashing across the entire crypto board and wiping away about $500 billion of the crypto market. Let's not call it crashing. Let's say it's falling. But that's very common with volatile assets. The fall in the crypto market can't be as a result of just one event, but multiple events, say a cascade of things, one thing leading to another. But that shouldn't come as a shock, especially for veteran crypto investors. Bitcoin fell by 30% to a near $30,000, which led to a major sell-off in the market. The crypto market hit another low, but as the selling intensified, they are pairing some losses. It should interest you to know that the currency hasn't traded as low as these levels since January. The crash was met by a 12% rebound, and in a total, the crypto lost about 40%. Although many investors remain bullish, a lot has also warned that murky waters may lie overhead. And with this fall in Bitcoin, comes an accompanying crash for other cryptos. The fall met the temporary erasure of all crypto gains. Continue watching to find out the 5 reasons behind the recent crypto crash. Number 5. Elon Musk. The bearish tweets from the crypto enthusiast Elon Musk is one of the main reasons for the recent crypto crash. Or should we just blame Christopher Franco for the tweet that he showed Bitcoin on fire while he was smiling calmly by the side? Just imagine! No one is surprised to know that Elon Musk, the CEO of the electric vehicle maker Tesla, is one of the main reasons why crypto has been experiencing rise and fall. Musk, in a recent announcement, suspended the use of Bitcoin to purchase electric vehicles. His reason for this are environmental concerns, and these reasons to him arise because of the computational mining process of crypto. The computational mining process of Bitcoin involves the use of high-powered computers that are used to solve complex mathematical puzzles to enable the ease of transactions using Bitcoins. Musk's comments on Twitter caused the wiping off of over $300 billion from the entire crypto market that day. A suggestion by Musk that day also suggested that Tesla was not selling its existing Bitcoin. He said with emojis on Twitter that Tesla has diamond hands. It will impress you to know that that tweet was made when Bitcoin was at its low that day. The announcement by Musk was not expected by anyone, as it was just 3 months ago when he purchased Bitcoin that was worth over $1 billion. He also announced that Tesla has agreed to accept Bitcoin as a means of payment for the purchase of their electric vehicle. After the plunge, the Tesla CEO said it might have sold its holdings, but later clarified that none of its Bitcoin had been sold after the harm had been done. About Ethereum, did you hear they are in the business of flipping the value of everything they come across to a freaking 80%? Lots of random things to flip in. Number 4, China. As China is developing government-run crypto, it is regulating the use of other digital currencies. This digital asset policy was reportedly cracking down on the use of digital currencies. One would wonder why the government hates to embrace cryptocurrency. It's nothing too difficult, just that they hate the idea of proof of work. In China, 3 Chinese banking and payment industries before the plunge had issued out a statement, more like a warning, telling other financial institutions not to conduct virtual currency-related business, including the trading and exchange of fiat currencies for cryptocurrency. Their hardline on digital currency is not new. In 2017, the Chinese authority banned the exchange of crypto locally and the shutdown of the so-called initial coin offerings, the ICOs. This is a way for companies in the crypto space to be able to raise money by issuing new digital tokens. Also, traders in China make a huge contribution to the Bitcoin market. After the shutdown of the Chinese banking and financial institutions, their influence was reduced significantly. Their crypto operations have been moved abroad. Number 3, institutional support retreat. Institutional investors appear to be shying away from Bitcoin and backed into traditional gold, which, coincidentally, has been seeing a lot of climbs in recent trade. This is one of the major reasons for the weakness of Bitcoin and the current crypto crash or fall, as we agreed. In the crypto market, this reason is augmented by the temporal reversal in the broader acceptance of cryptocurrency. One of the institutions of choice that have caused the boom in the market, Tesla, which bought more than $1 billion. Several financial institutions have stepped up their activities to include more options for the trading in crypto. Major Wall Street banks have started working on crypto trading teams to make easy transactions for their clients. Another institution of concern is Coinbase, a cryptocurrency exchange company that became known through a public listing. Institutes like SoftBank have had active crypto so far, but may reconsider following the crash. And Block.one has decided to upgrade Voice from a fungible to an NFT-based social platform. Status, on the other hand, is planning to enable crypto-to-crypto payments in its keycard while still developing a tool for crypto-native communities. These institutions altogether affected the rise and also the fall of crypto. Tesla stops accepting Bitcoin as a means of payment. Coinbase surging at $400 and losing those gains and was near a low of $200 per share. In addition to all of these, a report from JP Morgan said that based on future contracts, institutions and investors appear to be moving away from Bitcoin and back to gold. Don't forget that Bitcoin was often touted as a potential replacement for traditional metal as a store of value. Number 2, regulation. As Bitcoin and other crypto or related assets have become a bigger part of the financial market, they have come under scrutiny from regulators all over the world. There's the sentiment that the government crackdown on crypto can trigger another crypto winter and reduce trading activity. Many developing countries, which view crypto as a threat to their fiat currencies and monetary system, may experience a harsher crackdown. This is also one of the reasons why many Bitcoin investors want a Lambo instead of a Ferrari, because Ferrari is owned by fiat. Just kidding, anyways. One major regulator concern is in China and its new rules of other digital currency as against their government-run digital currency. Also in the USA, Gary Gensler, the newly appointed Securities and Exchange Commission chairman, said regulators should be technology neutral, but in the actual sense, more consumer protection is needed in the crypto market. It is suggested that India may be on the way to scrapping the ban on crypto and go ahead with regulating crypto. In South Korea, there is a continued back and forth scaling by the government concerning the anti-crypto rhetoric, and the crypto policy has in some way or the other been placed at the top of the government's list. Also in China, it should interest you to know that there is some positivity there, with the government holding campaigns meant to aid in the eradication of crypto scams, and also the presence of internet cafes that have used business as crypto mining centers. Furthermore, America, Paxos, Anchorage, and Portugal have faced regulatory volatility. Some mining jokes before we continue. How many miners does it take to change a light bulb? 1 million. 1 miner to change it, and 999,999 miners to run in circles to determine who gets to do it. Kudos to our brothers in China. Now, the rise of the other not too serious cryptos like Dogecoin, which saw an increase in starting purely as a joke, could be one of the reasons there is a dampness in the credibility of the cryptocurrency market. But honestly speaking, do you know you can eat a Bitcoin? Ask me how. With a megabyte. Number 1, a risk-off trade. The recent crash of crypto is not isolated, showing that the fall could have been part of a larger rotation of investors who are moving away from the more speculative trades. You should know that not only is crypto falling, but tech and growth stocks are struggling as well. And many of these outperformed the broader market in magnificent ways during the COVID-19 pandemic. An example of a struggling fund is the ARK Innovation ETF, a hedge fund of high-growth stocks that is led by star fund manager Cathie Woods. It went down by 30% of its February high. Another one is the tech-heavy NASDAQ Composite, which has fallen by 6.9% from its recent closing high from the 26th of April. Another one of interest is the small-cap Russell 2000, which is down by 5.6%. All these declines have coincided with the delay of the deadline for tax payments, which could have been a result of selling pressure to pay off gains. Bitcoin and others in the crypto market are known as volatile assets. It's one of their characteristics. Long-term investors have been advised by bullish investors to stay stay in the course, or, before dumping their crypto holding, do a review of their original investment. In the words of Ulrich Leica, the executive director of crypto hedge fund ARK36, in terms of Bitcoin outlook, things may be looking grim right now, but historically, this is yet another hurdle for Bitcoin to overcome, and it is a small one compared to what has been braved in the past. Even if past performances is not a guarantee of future results, it happens to be what bullish investors put their trust in when taking a stance behind Bitcoin or other cryptos. As already stated in this video, the recent crash of crypto is and cannot be blamed on one event, but on multiple events, and fear and uncertainty and doubt surrounding the future of crypto. Having stayed to the end of this video, what's your take? What's your stance on the topic? What do you think are the reasons for the recent crash of crypto? Don't hesitate to drop your suggestions and opinions in the comment sections. Also, remember to like this video and subscribe to our channel for more engaging content. Before we go, let's tell you what we figured out. We figured that there exists a very critical distinction in the cryptoverse. Dogecoin is a ton of shitcoin. SafeMoon is nothing more than a scam coin. And Bitcoin, that's your boomer coin. Bye.